Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In today's video, I will be speaking about accumulation and distribution. So what these two concepts are and how we can use them in trading when we are analyzing the charts in order to increase the probabilities of our setups and identify turning points in the market. When we speak about accumulation, usually we refer that to the building up of long positions, okay, so buy orders from an institutional perspective. When we refer to distribution, we are referring to the liquidation or selling of those buy orders from an institutional perspective. Now, usually when you will have an accumulation, you will see the market, which is obviously in a bear trend. Then the market creates some horizontal price action, which is the accumulation, and then the market rejects to the upside. When it comes to distribution, you have a market which is in a long trend, so it is in a bullish trend. The market then creates some sideways price action, and the market then rejects to the downside. Obviously, in this case, what was happening during the sideways price action was the accumulation of longs from an institutional perspective. In this case, was the selling, so we were seeing strong selling pressure from an institutional perspective inside of this horizontal price action, and then the market starts its decline. And I will obviously now go to a live chart to show you a lot of examples of how this happens and where it happened. For example, here on Euro USD, which is the most traded pair, I took it on purpose. Now, you might be asking yourself, now, why is it that the market creates a horizontal range, or in general creates this sideways price action when it comes to accumulation and distribution areas? Now, the reason for which we see many days, sometimes even weeks, and in some rare cases even months of sideways price action when the market is in an accumulation or distribution phase, that is because in the market, for every buyer there needs to be a seller. Okay, now obviously, for retail traders, it's very easy to trade because they just click the button and their order gets filled. It is not the same thing if you are an institutional trader, because your orders are massive. So you have a huge order. It can be hundreds of millions when it comes to one single position. And in a situation like this, there might not be the liquidity in the market to actually fill your order. So let's say, for example, you want to buy, but the amount that you want to buy is so big that there aren't enough sellers in that specific moment to actually give you the possibility to just buy that whole amount. Now, if there aren't all those sellers, what can you do? Now, obviously, that is where accumulation comes into play. You create sideways price action, you keep the market in a range, and you continue to constantly buy from the sellers that constantly continue to come in the market. So you slowly build up your long position. So you accumulate long positions. And obviously that is in accumulation zone. Obviously, there we also have room for manipulations, which obviously increase the amount of sellers, so increase the speed at which you can carry out an accumulation, which is something that we all know that is already happening in the market. The market is very manipulated, and you will have a lot of stop hunting and stuff like that, which is once again created in order to fill those orders that institutions want to fill. Same thing for a distribution. If there aren't enough buyers, you cannot sell, because for every seller there needs to be a buyer. If you are a seller, you need a buyer in order to exit your position. So if there aren't enough buyers and you want to sell, you create this distribution in which you continue to sell to people that are willing to buy, because you can't just click the button and sell immediately because there aren't enough buyers in the market. Once again, you can create manipulations. And anyway, in general, you constantly continue to sell, creating this range. And then once you are basically finished selling, at that point, the market can start a continuation to the downside. So these are the concepts of accumulation and distribution. Now, I want to go now into some live charts to actually show you some examples of accumulation and distribution. And I also want to put this into perspective with some COT data. Now, what is the COT data? The COT data is the commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. Now, we are able to track their orders. Therefore, we can see how long it actually takes for them to move their positioning, for example, to bearish, to bullish. We never see it immediately happening. And this is the proof of that it takes a lot of time for them to actually move their positioning. Just to give you an example, look here, the pound, okay? Now, what we can see here is the net positions. Now, the net positions are indicating how their positioning is basically changing because it's simply longs minus shorts, okay? Look, we went from having 2.2K net positions. It took many months. Look how many months it took. It took 3 months for them to shift from a positive net positioning of 2K to minus 73K net positions. So basically, in order to increase their longs from 47K to 107K, it took them 3 months to do this. And their long positioning, in order to cut it from 50K to 33K, once again, it took 3 months. This is just to show you that it takes a lot of time for institutions to actually move their positioning, because it's not as easy as for retail traders that they can just click the button and there is already enough liquidity in the market for them to immediately have their orders filled. So going back to the chart. Now, for example, we know that institutional levels are usually monthly support and demand areas. So basically support and demand or resistance and supply zones that we see from a monthly perspective. So long-term historical structure levels. For example, we are currently testing one of those. In fact, we can see how from here the market had started this move to the upside, again from here, again from here. At the moment, we're testing this exact same area. So there's a good probability that we will actually see an accumulation inside of this area before the rejection to the upside. Now, when you identify your zone from a monthly perspective, in order to then go and identify an accumulation that could happen at that monthly demand and support zone, you need to go down on the daily time frame. That is where you will easily see if the market has started in accumulation. Now, it would appear by looking at this price action that we have just started right now in accumulation with the market that is currently ranging for a few days. Now, what could easily happen is that we will see for more days this horizontal price action and then a rejection to the upside. This is definitely a possibility, but at the moment, we still don't have any confirmation from a COT perspective. In fact, if we look at the euro, we still don't see longs getting added, so we still haven't added into an accumulation. We need to see few reports come out to confirm that we are actually getting an accumulation on the euro. At the moment, we still don't have that. However, this could be the start. Now, looking back, I want to show you the last time that the market was around this area. Now, the last time that the market was around this area was exactly here, right? The market here was inside of this area and it rejected to the upside. Now, look at what the market did when we were inside of here. Let's drop down on the daily time frame. Now, from a daily perspective, it is pretty clear that when the market actually tested this zone, it created a perfect accumulation before rejecting to the upside. In fact, we had all this sideways price action, days and days, actually weeks of horizontal price action. Now, inside of here, there's a very high probability that we were actually seeing a lot of longs added. We could actually go back, check the COT data and see that we were actually getting a lot of longs added inside of here. So this was an accumulation zone, after which what happened? We had a massive move to the upside, right? Now, after this massive move to the upside, okay, when the market then started once again creating this move to the downside, what did it do before starting this move to the downside? Now, the move to the downside started exactly from here, right? Now, if we drop down the daily time frame and we see at what was happening when the market was around this area, we can see that in fact, also here, we did have an accumulation. A distribution. We had days and days and days, actually weeks of the market just moving sideways inside of this range here. Actually, we had to test this level twice, creating the monthly double top that we have already identified. In fact, here we have this double top. Now, we had to test this area twice. We had first a distribution happening around here. However, it was not enough, so the market makers brought the market back into this level, creating even more distribution, and only then they had finished selling all their positions, and at that point the market could start this move to the downside. Looking back, just to give you even another example of this, look at this last swing here, right? Before creating all this move to the downside, the market was at this level. Now, what do you think that happened here? We most likely had a distribution, and a distribution, as we already said, we want to identify it from a daily perspective. And if we drop down on the daily time frame and we go and see what was happening inside of here, we can see that that is in fact exactly what was happening. We had a perfect distribution here, with the market creating a massive range and weeks of sideways price action, inside of which we could easily confirm that from a COT perspective, we were getting massive selling pressure. And after that, the market obviously started all the move to the downside. So these two concepts of accumulation and distribution, combined with monthly demand and support and supply and resistance areas, and also combined with the confirmation of looking at the commitment of traders to see how, from an institutional perspective, orders are getting shifted, can definitely help you get an edge from a directional perspective in the market over the rest of the market participants. So I really hope that you enjoyed this tutorial on how to identify, how to use, and what actually are accumulation and distributions areas in the market. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.